Hello, I'm Clara Hermit and this is Mould on Markets, our regular look at the financial markets with Investment Director Russ Mould. Russ, how are you?
Very well, Clara. How are you?
I'm not too bad at all.
Good to see you again.
Lovely to see you as well.
Thank you.
Russ, what is it that advisors and their clients should be thinking about right now?
Well, we're hardly spoiled for choice, to be honest with you. We could talk about the huge stumble seen in the Eurozone bond markets, the rally in oil prices, even a recovery in Dr. Copper. All three of those suggest the market may be moving back toward economic acceleration and inflation in its worldview, rather than worrying about a triple-dip recession and deflation, unless the ever-fascinating Russell Napier's Eric blog is right, and the bond spike simply reflects QE and monetary policy reaching their natural limits. Now, they're all subjects to which we will return in the future. They're all worth a video on their own. But for now, I thought it was just worth wrapping up on the UK general election, don't wince, which resulted in a Conservative majority government on May the 7th. Yeah,
everyone had been expecting a hung parliament and a coalition or even a minority government, so the victory for David Cameron did come as a bit of a surprise.
Just a touch.
What potential implications are there for the market?
Well, I know that we've sort of gone through some of these in previous videos, but I think it is well worth looking at, not least because we saw the FTSE 100 pop high on the 8th as the market digested the news. Now, maybe you could argue that was understandable given the uncertainty that prevailed before the ballot, and it may just be worth reprising some of the data that we've discussed before, some of those pretty charts that we've been through. Now, first, for whatever reason, and again, this isn't a personal political statement or one on behalf of AJ Bell, the market does seem to perform better under a Conservative government. The first graphic shows how 4 of the best 5 market performances by Prime Ministers since 1964 have come under the Tories, and all 4 of the worst ones under Labour Prime Ministers, and that goes all the way back to the inception of the FTSE All-Share. Second, Mr. Cameron's majority may not be very big, but that hasn't always bothered the market too much. The second chart shows the FTSE All-Share's performance, the red line, or the line, against the size of the government majority, which are the bars. And as you can see, there's actually little correlation between the two. Small majorities have seen the market do well and badly, and large ones have seen the market do well and badly.
And are there other stock market implications?
Yeah, I mean, we can look at other asset classes. I mean, we've talked about equities before, but but just to finish off on equities, Labour did have some very strong, clear policies that it wanted to introduce with regard to sectors like gambling, tobacco, utilities, banks. Now, those policies won't be implemented at least for another 5 years, so those sectors may be reassessed. Although note, the Tories are still looking at plain packaging for cigarettes and an additional levy on tobacco to help fund NHS care. So some of those industrial groupings also offer quite high yields, and the political risk towards their cash flow is now potentially a little bit lower. So it'll be interesting to see if the search for income takes the market back to those areas, also keeping income funds and investment trusts in the spotlight as well.
So what does the election mean for other markets, bonds and currencies?
Yeah, good question. I mean, just as with the stock market, for whatever reason, the bond market seems to prefer a Tory leader, and it's also relatively unconcerned about a small majority, at least if historic data from the Total Return Index for the UK 10-year gilt are any guide. The first chart here shows the returns in nominal, pre-inflation, not real, post-inflation terms, under every Prime Minister since 1983, and the difference between the Tories and Labour on the bars does seem quite clear. While again, the overall majority the overall performance under a full government term, again, there's little correlation with the majority between gilt market majority. Again, the line is the performance, the bars are the majority.
And sterling?
Sterling. Yeah, I won't actually bother you with the charts because there's no correlation at all. So that makes it dead easy. Forget it. No correlation. Performance, market, majority, nothing. This graphic, though, does show all the way back to 64, sterling dollar. And as you can see, the trend is, in the very long run, one way in terms of who's been in power, and that's down to issues such as UK productivity and so on. It's potentially, though, the most volatile area of all. The UK is running a current account deficit, and Mr Cameron's promise of an EU referendum in 2017 could keep everybody just a little bit twitchy, something all advisors and clients probably need to bear in mind.
Yeah, okay, thank you, Russ.
Pleasure.
And thank you to you for joining us. We'll see you next time. Goodbye.